Let's bring in my favorite Ec 10 Harvard economics professor, Martin Feldstein, right now. You were trying to convince me in the break why this was better than not doing it. I mean, we see all this nitpicking and where they're trying to like take money from somebody's pocket, put it in the other one.
The big thing is the corporate rate cut. I mean, taking us from the highest corporate rate around the industrial world, 35%, down to 20%, which puts us at one of the lowest. It's going to have a big, big effect on attracting capital to the U.S., to corporations, to investment.
Yeah. Delaying that for a year, good idea or stupid as hell?
Well, it's not a good thing. There must be better ways of saving $130 billion.
They could spend less.
They could do that. That would be good.
Yeah. You think? Do you have any hope?
But I don't think that counts under, you know, the 1.5 trillion.
I'm not surprised. I mean, they make the rules, so you're right.
They make the rule, and the rule is they've got to keep the deficit from the tax cut under 1.5 trillion. So if they don't do this, but why the child credit, which is, you know, giving credit to people who have children, even if their income is pretty high, that's a silly thing.
Well, I'll tell you why. Because of the stupid rules they've created, like you said, that they've made this problem for themselves where they can't even cut spending, but they have to plug the hole with money from somewhere else. So it creates all these bizarre, weird,
No, but what they're doing with the child credit is not cutting. It's adding to the cost. I mean, it's a very expensive piece of this bill is to give middle-class families who happen to have kids an extra credit. Well, that's...
Maybe they think it would play well when they're talking about all the other things they're taking away, like
I'm sure it plays well.
What do you think about sticking it to the states where they are spending a lot? I mean, there's a logic to that for sure. They're trying to make the argument that places like New York send a ton of money to the Fed, so they're getting taxed twice. What do you think of that response?
Well, my sense is that the deductibility of state and local taxes gives me a big incentive to want to have more state and local services. So I live in a town where things are great. We get we have a nice library, a nice swimming pool, an indoor ice skating rink.
Sounds lovely.
And I pay for all of this with roughly 60-cent dollars because it's all tax deductible. So if we didn't make it tax deductible, I think the voters in my town would say, well, wait a second, let's hold back on some
we
of
might
this
not
spending.
need all that stuff. Or you could be like New York, where we spend 25% more and things are just horrible and everything's gone to heck in a handbasket. And anyway, I digress. Is there any chance down the road, this is the hope I'm holding out for, we'll see growth as a result of the corporate tax cut? Do they come back and take another bite at the apple if this is successful, if there's another term? Do they come back and try and
I don't know
spend less and cut some income tax more?
I don't know that. I mean, remember, we had a really big tax cut back in '86.
Yes.
And then it's been eroded. And we've gone from what was a maximum rate of 28% to about 40% now. It would be nice to move back in that direction.
Right. It would be nice. But you're saying you don't think it's going to happen?
I don't know.
Yeah.
What my focus on now is the current bill, which I think is a big plus.
Okay. You made me feel a little better, as usual. Thank you. I appreciate that. Professor Feldstein, thanks for coming in.